Good morning. Happy hump day. It is Wednesday, September 10th, and the market will open in about 30 minutes. We wanted to talk about stocks. It's a time when you got to be a good stock picker these days because depending on which stock you picked, it either went up like Google or it went down like Apple. And it's most certainly an interesting time. We're going to, I'm going to be joined by Daryl. How you doing, Daryl?
Doing wonderful. How are you?
I'm doing well, thank you. And I we're going to cover stocks from two different points of view. I'll do fundamental analysis, look at the intrinsic value of a company by looking at their cash flows or profits, looking at their profitability. And Daryl has mastery of charts, and he comes in and looks at the charts and tells us, what are investors doing around that stock and what have been trading patterns that we he's observed in that particular stock. I think it's a really nice combination, and I hope you all really enjoy today's live stream. Looks like Shadow Guy is on. Good morning, Shadow Guy. Thanks so much for joining. And early on, I wanted to talk about the PPI report. A report came out that prices had fallen a slight bit, 0.1%, I guess, in August, and that might be a month over month number. But that does help the Fed potentially be in the mood to lower rates next week. What do you think, Daryl?
Yep, I have them on my screen if you want to put
You
the
are live,
share
sir.
on here. So Monday we talked about the economic data that I would be watching this week, and PPI was definitely one of them. And the non-farm payrolls annual revision, which the market definitely doesn't look at regularly, but given the job market, that it probably would be something that the market would be interested in. This number actually came in higher. There were actually over 900,000 less jobs created from March of last year to March of this year than was previously stated. So that was a big number. And then PPI is out today, and it did decline 0.1% month over month. They were expecting 0.3%, and the previous month was revised down to 0.7% from 0.9%. So it wasn't quite as bad last month as they had originally reported. So that's a month over month number. And then we look at the year over year number, that's 2.6%. They were expecting 3.3. And the prior month was 3.1, revised down from 3.3. So once again, on a year over year basis, it also wasn't as bad. And then for the core PPI, where I don't know if it's the same as CPI, they strip out food and energy pricing.
Yep.
I don't know if that's the same for PPI. It probably is. So that was also down 0.1% month over month. They were expecting 0.3%, and the prior number was 0.9. That was not revised. But the year over year was 2.8. They were expecting 3.5. And last month they reported 3.7, but they revised that down to 3.4 for year over year. So that number these numbers came in much better than expected. And when I look at the pre-market, the Dow Jones was actually right around zero before those numbers came out, and now it's up 0.43%, 196 points. And I don't recall where the S&P and NASDAQ were, but the Dow is definitely feeling that report this morning.
And the interest rate cuts, I think you show a chart where there's a probability of 25 basis versus 50 basis point cut.
Yeah,
What's that looking like?
Yeah, let's go look at that. Let me refresh this because this was before the report came out. So the 50 basis point cut is up 2% from this morning. It was 8.2 before the PPI was reported. And we have an 89.9% chance of at least a 25 basis points.
So chances are we're going to see a 25 basis point cut. And if we get a 50 basis point cut, the market will rally hard, right?
As long as it doesn't scare them. So there's a fine line between a rate cut and cutting too much, because that can put some fear into the market. If they are anticipating it, then yes, I think the market could rally on that. We're also getting an October, at least a 25. So if they don't cut 50 this time, we're at least getting a 25, and then they're pricing in another cut down below that 25 basis points less by 7.6% now. And December, there's another one. So it looks like we could get 3 rate cuts this year if they go by 25 basis points per meeting.
Perfect. Okay. So I have noticed that interest rates have been dropping, bonds have been increasing in value, and I think mortgages are going to be more affordable. People will get a lower mortgage rate on a home purchase and things like that. So
that was also released this morning. So let me take a look at that real quick. I get all this economic data from Trading Economics.
Mm-hmm.
So the 30-year mortgage rate was 6.64% last week, and it's 6.49%. And mortgage applications
went up, huh?
Yeah, they were down the previous week, but they jumped up 9.2%, which leads me to one stock. If people aren't watching it, they should be watching, is Rocket Mortgages.
Oh, that's a good idea. Let's take a look at it.
Let me get into my proper window here. So,
not to confuse it with Rocket Lab.
No, this is Rocket Mortgages. So let's take a look. Yeah, I think it'll work here. So RKT. Yeah, they've been on quite a run since beginning of the year.
Yeah.
So they were trading at 917 and they're up to 2050. I've owned this one for a long time. I've trimmed it quite a bit, because if we go back 5 years before the rate hikes, they were at 22, and then they dropped all the way to 5.3. So I did a lot of trimming, but I've held about 300 shares or so. And they're doing pretty well at the moment. And this one, they just closed on their Cooper acquisition, which is going to broaden out their business. So this is one to at least watch.
Yeah. For the year to date, I mean, they're up 81%, and they pay a dividend of almost 4%. So
be careful with that. Those are usually special dividends.
Okay.
Yeah, they haven't paid a they paid 80 cents in March, but that was the first dividend they had paid since 22.
Okay.
They paid out one in 2021 and 2022, and then they didn't pay one for 2 years, and then they paid out 80 cents recently.
Excellent.
So don't count on it for dividends.
Yeah, you got it. Can I show some fundamentals on Rocket?
You bet.
All right. So Rocket, I mean, 81.7%, most definitely the expectation that rates are coming down are really helping this company. And it's $43 billion market cap, revenue of 5.15. And as Daryl mentioned, it's a dividend, but it's kind of a every once in a while dividend. The revenues are expanding, and it looked like based on what Daryl was sharing with how many mortgage applications we're getting, they're going to see a bump in revenue. This one is kind of an obvious beneficiary of lower rates. People will refinance. There'll be more homes purchased, more transactions. But I think the refinance boom could really be there because we are separated from super low interest rates of 2020. Like in 2020, I didn't have much left on this home, but I refinanced at 2.5%. And I pulled out 300 grand that I ended up buying a nice bond portfolio around, making 6%. 6 minus 2.5, pretty nice net interest margin.
Yep. Yeah.
So that was like, I mean, that was incredible. 2.5.
Yeah. You did good
Yeah.
on that. That was a smart move.
Fast forward for a couple of years now, we've been in this 7.5. So there's people, there's households that are on 7.5 mortgages, and if you offer them 6.5, that's a good savings. And more importantly, you have household creation. You have younger families that are like, hey, we'd like to buy a house, and lower interest rates is going to enable us to buy that house. So good stuff's happening there. And I think their revenue is going to be even better in Q3. This quarter ended on June 30th. The next quarter should do well. So these guys are going to do well. Glad for them. Glad for the real estate market. Let's see their forecast. Got 14 analysts covering this stock. 25 is the best price target out there. And somebody out there is a grumpy bear with the price target of 10.5. Expecting, and I guess they have the forecast correct. I would agree with this forecast that this year they're going to grow well, but next year, look out. The year after that, look out. This is going to do well for a little while. Very good. The PE right now is really, really high. And but it's getting better. And I'm getting a little delay on my computer. I don't know if you're noticing that, but sorry about that.
Really. No, not really.
Okay, good. All right. So I think we've got a request. Let's see here. Any chance Rocket Lab has a mortgage? There is a chance. I'm sure a couple of the employees over at Rocket Lab are like, hey, I want to buy a nice place to live. I don't even know where Rocket Lab's located. And they buy themselves a nice place. So good stuff. So we've got a super chat out there, and I'm going to let you, Daryl, talk about Oracle. I work at Oracle, and I don't want to talk about Oracle because I'm asked not to. But you have any thoughts on Oracle?
It's not one that I follow very much. I was a big customer of Oracle for a long time. When I worked in IT, we used their database management systems, and we used Primavera that they bought for project management, scheduling, and resource management, and what have you. So I've been a customer from Oracle for a long time, but it's not one that I follow personally very much. But they've done very well here recently over since the April 7th low, where they closed at 126. They're now up to 113%. And let's look at the aftermarket real quick. Intraday, go to Oracle.
So Oracle may get to $1 trillion market cap today.
Yeah, so what they do, close at 242 yesterday, and they're up to 322.
Yep.
So that's insane. 34% in one day.
Man.
Yeah, that's
So let me just share a few things on Oracle, and then, as mentioned, I work at Oracle. I really have had a good career at Oracle, and the things that I would say about the company is that I think the strategy is super solid, a very good strategy going forward, and our founder Larry Ellison, he is something else. And Oracle, if you look at the definition of Oracle, is, like Warren Buffett's referred to as the Oracle from Omaha, meaning a person that could see the future. And it really fits Larry Ellison. And at certain points, starting with our database, um, it was a startup company back 40, it's 1977. So 47 years ago, 48 years ago. And he challenged IBM. I mean, IBM was massive, and his idea was relational databases. And his company was like this tiny startup, and he won the project with like a big government agency. And from there, the company was born, and he saw the future that was relational databases. And then you go on to SaaS, and we're leaders in SaaS, and he saw the future, and then he really bet a lot of chips on cloud infrastructure, and here we are. This is the latest buzz in the market is around the cloud infrastructure business, which is growing really fast, as reported in the financials. So overall, really, really happy that the company's had leadership that really, really does see the future. It's still founder led. So I own the stock. I'll be owning it forever, and until maybe my kids will own it after I'm gone. Did you have anything else to say on Oracle?
Well, they're looking good on the weekly trend chart as well. So just like every other company in 2022, for the most part, at least the tech companies, they spent most of 22 kind of in the doldrums, but since the end of 2022 all the way through April of this year, they were above their long-term trends. They only spent about 6 weeks below those trends, and now they've, shot back up, and it looks like if I put my cursor at the top here, that's higher. They're above their long-term trends by more than they have been in 5 years. Same way with the medium term, although it had decreased here slightly, I expect to see a pretty sizable jump here over the next couple of weeks there. In the short term, they had been under their shorter term averages just for 2 or 3 weeks, and now they're moved up above those again. So it's looking strong in the short term, the medium term, and the longer term trends. And what I mean by that is this is weeks to a couple of months. This is a couple of months out to half a year or so, and this is for a year or longer.
And congrats to Shamba Basher. He's a holder of Oracle, and I'm sure you're looking at that 33% gain, just thinking to yourself, I'm going to upgrade my lunch or
There you
dinner
go.
tonight. I think if I go to Chipotle, I'm gonna get some extra walk. I'm feeling it today. So congratulations. And stocks moving like this, I'm feeling like we're near a top, because Oracle today, and I think yesterday, was it Nebius was up like 50%.
Yeah.
And we had a couple of others, including United Healthcare. If we can talk about United Healthcare, it had a really, really good day. And it's getting too easy for these stocks to fly up. And the greed is, in my opinion, it's irrational and a little uncontrolled. It's like, it's not supposed to be this easy. So, I don't know what your thoughts are. I don't think calling tops and bottoms, we don't make a whole lot of money, but we do make money when we have capital to deploy when stocks sell off. I'm a believer of that, hey, when things are really difficult from a news feed perspective, it usually creates good opportunities to buy at a good price. But it's just too easy. Like United Health went up 8.64% yesterday. It's now market cap 315. We're at 347. We've been talking about this stock for a little while, and it's going up, and it's taking the escalator up, and I think it's going to keep going until it hits around $600 per share, and it's going to reclaim its market cap way up at around 600 billion. The dividend has gotten good on this stock, and historically this has been like a 1% dividend payer, but it's looking good, and as the stock price rises, this will continue to go down. But I don't think any investor is going to complain about a stock price rising. PE is still rational at 15, and historically this has had a higher PE. Analysts still think it's discounted, and the company fundamentals are really strong. The company keeps growing. What caused yesterday's rally was United Healthcare. They're coming up on the enrollment period for healthcare. People enroll and they renew their health insurance, and their enrollments for the premium Medicare plan, which is a massive, think about all the people who are on Medicare. That's a massive population of insured lives. And the enrollment data is pretty much in line with what they had guided. So there isn't going to be any drop in revenue. It's just going to keep growing. Well, the market's like, whoa, United Healthcare is going to keep growing. It's going to keep making money. It's a good stock. So the market snatched up more shares. I would love to see the charts on this because I believe in United Healthcare from a fundamental perspective. I think they continue to be discounted, but I'd like to get your thoughts on what you're seeing in the charts.
You bet. So we've talked about this one several times, and I drew this chart at least a couple of weeks ago, and I put this downtrend line on it, this blue dotted line. And once it broke out above that, that was a really positive sign. It means it's breaking out of the decline. And then this was the day before the announcement of the super investor stepping in. So then the next day it jumped up 11.98%. And then 2 days ago, not yesterday, but 2 days ago, they reaffirmed their guidance, and that broke it out of a 65-day swing high. And then yesterday, we broke out above a, let me think. No, this was a 13-week high, swing high. This was a 65-day, so on the daily chart. So now we have two swing highs, one on a weekly chart and one on a daily chart. So even though it jumped up, I bought an extra 10% yesterday at 329. The low was 327, and then it ran up to as high as 351 yesterday and ended up closing at 347. So I bought some extra yesterday early in the morning.
So that explains why the stock rose. Is Daryl bought some shares?
That's it for sure.
Forget Warren Buffett. When Daryl buys, that's when it moves.
Keep in mind these price to volume bars. So even though we had this trend line down and it broke, I was looking at these price volume bars. So that goes from about 333 down to 299. So people were buying pretty heavily in this area.
Mm-hmm.
And then it dropped another $70 a share. So these people, if they're short-term investors, become what is called stranded longs.
Mm-hmm.
So they bought up here at probably on average at around 316. 3 or 4 weeks later, they're looking at 241. So
Mm-hmm.
they were down a lot. That puts pressure on upward movement of the stock.
Mm-hmm.
So you can see what it did here. Even though Warren Buffett came in and what have you, it traveled sideways for 3 weeks. And that's because of these sellers. They were putting downward pressure on the price. But once it broke out above that, now the ones that didn't sell are in a profit now. They're not as eager to sell as they were before.
Mm-hmm.
So we broke out above that price. So there were 3 things going for this yesterday morning, and that's why I bought. It was a 65-day swing high, a 13-week swing high if you look at the weekly data, and we broke out above this resistance. The next line of resistance that I see, I'm going to go to another set of charts here. These are the ones I use on a daily basis to review all of my stock holdings. I have a volume average weighted price here, this dark orange line. So that's the average price paid by volume since my anchor point, which was about a year or so ago, which was on an earnings day. So
And
you can,
Warren Buffett, by the way, paid $311.97 per share as it was reported on his 13F filing for United Health.
yep, it would have been pretty easy to guess what it was just based on the second quarter average price. So that's interesting to see. So anyway, this could become a point of resistance. That's sitting at 370. And then the next point of resistance that most investors are looking at is the 200-day moving average, which is sitting at 419. Not a lot of investors use this average volume weighted price, but many do. I like to keep it on my chart just so I know if I'm paying less than what the average price is for the amount of volume that's being traded or above. So I like to watch that one.
So from this stock price up to 419 per share,
Yep.
which is I'm going to guesstimate about 15% higher, there's little resistance.
I don't see much resistance, so could run another 20% from here. That was the 4th reason that I bought. So I had a list of things that made me a buyer yesterday.
Yeah, very good. So it's down in the pre-market today. Excellent analysis, Daryl. Thank you so much. It's exactly what I wanted to see and hear and understand and be informed with. Stock is trading slightly down now. I may have to multitask this morning, and the market's opening. It's down, so I'm going to open up my brokerage account and buy some shares of United Health, because my only complaint about the stock is it gives me very little, a few times to buy the stock, and I'm in a very accelerated dollar cost averaging plan with United Health. I own, I think about 40,000, 45,000 of United Health. I'd like to get that to $100,000, and I need to get there quickly because it's my expectation that it's going to keep rising, and I'd rather it rise with all my capital deployed instead of waiting around for it to get to $600 a share. And by that time, I'm probably not going to be as enthusiastic about buying it.
It
So
looks
thanks.
like they might be declining in the first few hours of trading here.
Mm-hmm.
And they are down a little bit. These are the once I decide to buy or decide to sell, then I switch over to an intraday view that you're
Mm-hmm.
looking at here.
This
So,
looks like a scene from The Matrix, by the way.
but I can tell on the 1 minute window, which is pretty small, it looks like it's going to be declining. Then I can switch out to 5 minute bars, and it's definitely declining. Looks like it's gaining a little bit more speed. But then I look at these bars down here. Is the divergence getting wider or is it getting narrower? I look at the RSI on this particular time frame. It looks like it's going to be going down. So depending on if you're trying to get a really good price or not, I usually switch to these views just so I can get the best price that I can after I decide to buy. So it is moving back up. So I don't know, but it looks like this is an hourly chart now, and got the 5 hour line, which is the magenta line. It looks like it's getting ready to roll over a little bit. So there could be some downward pressure here. You might want to think about waiting an hour or two and see what happens with the price if you're price sensitive. If you're not price sensitive, then I wouldn't worry about it.
No, I need to accumulate. My plan is to accumulate, and it's a good day to accumulate United Health, and that's what I'm going to do today. Very short term gains and losses are not in the playbook. Long term gains, the first go around on United Health, I made a very good return, over 100%, probably closer to 200% on United Health. And that's what I'm after, is long term, just a really nice appreciation in a company that I kind of know. It's a very known commodity. It's, over the next 10 years, people are not going to stop using healthcare insurance. It's going to be a necessity. So that in itself is kind of okay, these guys are going to have a business if they operate really well. I'm sure they're going to get a permanent CEO. Like the CEO that came back, by the way, is a very talented CEO, but he retired. So I think he probably wants to retire and, do something do something else. So they're going to hire a permanent CEO. And once that happens, it'll probably also just help the stock rise further. All right, so let's catch up on some comments, and then I wanted to get your thoughts on I think it's got a very low beta. It's called WLDS, Wearables Devices. It's up 700%. I think this stock may break the chart software when you put it in your format. Let's look at the year to date. The year to date's still down. How is that possible? Maybe this chart's not updating. Yeah, this chart's not updating. Here we go. 1 day, 5 day. Here we go. So, and that's still not updating. So we'll ignore the charts. So the market cap on this is a whole $8 million. And yesterday it was 1 or 2 million. So they don't have much revenue. I think they have less than $1 million of revenue, and they lose money. No big surprise. But I think they got approval on a patent. So and they have some kind of announcement along with their financial results, and there it is, the patent. So this company is, I referenced the movie earlier, but look at this, what these guys do. These are sensors. You wear a bracelet and it's picking up the nerve signals in your body. So then you can control, based on thought, and then control computers, devices, maybe in the age of robots. You can control your robot with it. This is where we're at. It's 2025. So this company, this is their idea, right? Now they don't make any money yet, and for all we know, this is not doesn't work. It's like, yeah, it picks up the wrong signals. It's cost $10 million per device to make, so it's not very commercially viable. We don't know, but it is a big idea, right? Uh, I haven't seen this, but I know that I know some patients, for example, I've observed that people that have lost a hand or something, they get this prosthetic limb and it has some of this technology, so to speak, and they're able to somewhat use that artificial limb. I have seen that. I have seen that technology demonstrated, and that's like 5 years ago. So this concept is possible. Now, is it commercially viable? I don't know. But the market is excited about this stock. Mike, the dividend investor guy, he owned the stock, I think, for a short period and made some money on this. Boy, we went over this on the live stream last night, and I just laughed. And in the pre-market, it was up to $2, and not a stock that I would kind of bring into my process. I think it would break my process. I would abandon my process and completely just kind of on totally qualitative, uh, judgment. I would buy a stock like this, but it's not nowhere near like a valuation stock where you would base it on valuation. If it works, I'm sure they're going to be worth a lot. I mean, this is potentially a good company that Apple could acquire or Google would acquire. Somebody would acquire their technology. So I don't know if you could show the charts or if it makes sense to show charts, because even with the stock analysis website, it's not even updating the charts. So, any thoughts on wearable devices? It looks like I may have lost Daryl for a few minutes. So, wearable devices. I don't know, Mike, are you still in this stock? Are you still going in and out of this stock? And congratulations on finding this one and investing in it. I see your comment on DSP. So WLDS is Israeli. Market is booming there, especially in tech. Yeah, I've heard. And some reports I've heard is that the Israeli stock market is like doing way better than the US stock market from an appreciation standpoint. So I heard similar news. Yeah, you'd think that nice software would be booming, but that's an Israeli software company. I think eventually they will, because just software has been kind of ignored for a long time. I think that software is going to come back. Even CRM, the big Salesforce, company, that's been totally ignored, even though they're growing and they have a very good AI business. Not sure why it's been sold off so much. And let's see here. So, and I agree with this comment. I think software will come back as the profits and growth. I think it's there. And I don't think AI is going to disrupt them a whole lot. I think for NICE, it's actually going to be an opportunity for them to have a new set of products that are agents that customers can deploy to do call center activities, customer service activities, those kinds of things. All right. So Peyton, is there some semiconductor news today? NVIDIA's up 3% along with others. I don't know. So um, I'm going to look at NVIDIA just briefly, and then we're going to get back to DSP. So it's up 4%. I guess the AI spending fears are fading. I guess so, because announcements that, companies are betting big in the data center. Microsoft signing a big contract with Nebius, Oracle announcing really good forecast. I think that's what's causing Nvidia to rise. Yep, nice software. So Upstart getting killed today, down over 9%. We covered that one last night. And I wonder why, because if interest rates drop, that should help them. Interesting. We can take a look at it later. All right. So, and you sold at $3, man. So that's on wearables, right? So interesting. And Daryl lost power. Oh, here we go. Sorry, I didn't see you there, Daryl.
Yeah, I'm back on now. I saw the house power just shut down for a few seconds, and then it took a while to get restarted.
Yeah. Yeah, and I was on a member call, I think it was I forgot what day of the week it was, but the power went completely out where I live. And
Wow.
it was like, okay. So I got on my phone, hey, sorry guys, but I have no power.
Mhm.
So I guess that's the end of the call.
There you go.
All right, let's get into DSP. Now, the big player in this particular little industry is AppLovin. Viant is a very small company. They do the marketing in when you hear omni-channel, it means that you're marketing in multiple ways. You can market on Facebook, you're marketing on a TV ad and so forth. These guys, good growth overall, 30.9%. The quarterly did disappoint, 18%. So they got to start growing. And especially since AppLovin is really growing and accelerating their growth. So this top line, investors are maybe nervous that AppLovin continues to get more market share. They're growing faster and they're massive compared to DSP. So these guys got to grow. When are they going to announce next? They announced on August 11th. So I'm going to go forward 3 months. They're going to announce in early November. Year to date, this one has not done well, down 46%. 1 year, 99. So trailing 12 months growing at 30%. Last year, they grew at 29.7%. They do have good fundamentals when we look at gross margins. Well, gross margins are not as good as I thought. They're not like AppLovin. AppLovin has better gross margins. And I think their product mix is different than AppLovin because AppLovin has margins up at around 80% gross margins. Okay. And so let's take a look at the forecast. We got 9 analysts covering it. The analysts believe this one's really discounted by 101%. Look at that. If these guys can grow at 30%, this stock's going to go up, I would think, because the fundamentals support a higher stock price. The earnings per share, they're supposed to be profitable this year. Their profit is going to go up 80% next year. It's going to be flat and then grow another substantial amount in 2028. So this looks good. And they're going to grow at 16% this year. Now that's not good enough. And they're going to grow 15. And the reason I say that is AppLovin's just so big. And AppLovin is much bigger and they're growing really fast. So how's AppLovin growing at 77 and they're much bigger? And Viant is smaller and only growing at 15. That shows that customers just don't like the DSP service product and they really like the AppLovin one. AppLovin's doing all the right things. They've got to pivot, change, improve, and start growing faster because they're much smaller. They should be able to grow faster. When I look at evaluation for DSP, it's discounted by 36%. So I'm not up there with 100% discount like other analysts, but it is a nice discount on DSP. So we'll see when it starts to come around. But, it's like Uber and Lyft. If the biggest player in the space is just killing it, just doing great, $192 billion market cap, it got added to the S&P. A lot of things are working for AppLovin. This is just a terrific, terrific stock. And you see that it had a year where it didn't grow. So they had to figure something out. They grew a little bit in 2023. They started to grow, and now they're just booming. They're doing something that's working real good. So that's, I think, DSP's biggest problem is in that they're in the same business as AppLovin, and AppLovin is pretty much eating everybody's lunch in that space. Any thoughts on DSP, Daryl?
Yeah, it looks like they're trading about where they were a year or so ago. Their 200 days declining, so their overall trend is downward. Their 50-day is declining. Their 20-day did turn up. And then if we draw a line across here, I would need to see them break out above about 1190 to 12 before I even decided to get interested at this point, because they're definitely in a downcline.
Yeah, the last earnings where they came in with a really low growth number, that really caught my attention. I'm like, okay, that was the wrong direction. You can't have AppLovin growing faster quarter over quarter, and then you're growing slower. They're much bigger than you are. It should be the other way around.
Yeah,
But
look at the PPO too. Even though it did have a crossover here, look how slowly it's moving up, and it's actually starting to roll over already. So this little bit of momentum they had right here is somebody's going to pull the plug on that pretty soon. It does not look good to me.
Yeah, doesn't look good to me either. I think as mentioned. So let's turn our attention over to Upstart. Upstart is a new generation finance company. They do a lot of their work, through algorithms and lend out money to people. Year to date, it's not doing great now because it's down 7% just today. And over the 1 year, it's up 82%. This has really been a stock that really got bid up. Last time we had a overheated stock market, and then it corrected. And the 1 year, though, investors have done well, sticking around or I should say buying about a year ago. You would have done really, really well. And this company is growing quite well. Look at that. And we valued this stock yesterday in the live stream. And I'll come back to that valuation in a bit. But the growth does look good. And I think the economy, some of the economic data tells me that the economy is not in a recession, but it's not booming. I think the job losses or the lack of jobs created kind of is a sign to me that we're not booming, and we're not in recession, but we're kind of in between the two. So having said that, are consumers in the mood to buy big ticket items where they may use some of this financing from Upstart? I think less than if we were in a real boom period. I don't know if that's going to affect these guys because they're small. They're relatively small compared to the big giants like, JP Morgan, big banks, and big lenders. These guys are tiny compared to those guys. So they may continue to grow because they're servicing a population that really likes the experience that Upstart provides. The analyst like this stock. They think it's discounted by 16%. There is an analyst that hates this stock. He's at $16.50 price target. And there's an analyst that really likes the stock. And they think that the company's going to keep growing nicely. These are good growth numbers. They'll be up to 1.6 billion. And I'm curious to see on their income statement, how do they recognize revenue? So you have, I guess I'd have to look at their actual financials. Is this just net interest margin that they're recognizing? I'd be curious to understand how they recognize revenue. What portion of that is, what portion of a loan is being recognized? All right. So Upstart, we valued it yesterday, and based on earnings per share, it's discounted by 45%. So, it's not a stock that I'm an investor in. I'm a little unsure about this market because this is a new way of financing, and they're using a lot of systems. And I totally believe in systems, but I also understand that if something goes wrong, it's going to go wrong big time. And I'm afraid I would wake up one day and it'd be like, oh no, Upstart has like big losses and big write-offs because of this. And they don't have a kind of a diversified business where they can lean on other businesses while they fix the trouble they have in their finance business. So that's one of the thoughts I have in the back of my mind. I have PayPal, which has, similar capabilities of buy now, pay later. But this one here, I haven't warmed up to it because I'm afraid of that big issue, or that risk, I should say. But it is a discounted stock. If somebody really understands this business and really likes it, have at it. So good one. This one does remind me of Dave, D-A-V-E, that symbol as well. And that stock I really like. I'm an investor in Dave. So that is Upstart. Any comments on Upstart?
Well, they are flirting with their 200-day at the moment for the second time in 2 months. So I don't really have a whole lot to say on this. It looks pretty volatile.
Mm-hmm.
They got a declining RSI and the PPO is underwater at the moment. Money flow is positive. But I'd be careful with this one.
Interesting. All right. So let me take a look at the markets and see what's going on.
Dow moved back into the red.
Yeah, it opened in the green, down in the red. S&P is up, and NASDAQ is up. So we're back to, this market is really challenging investors. Hey, you have to pick the right stocks because not every stock is in the green. You got Amazon down, Meta's down, Apple's down, and you got some med devices down. United Healthcare is down, as mentioned earlier. And then you have some green. This whole AI universe is green. CrowdStrike's up. And you have some of the infrastructure hardware companies are up. Cisco, Arista Networks. Energy is up. I guess oil is up a little bit. Okay. So you got to pick stocks these days. You got to be in the right ones. And yesterday, this Google and Meta were nice and green. Amazon, I think, was, I don't remember what Amazon was. But let's take on Apple for a second. So Apple is having their big, conference, right? And I haven't heard a big idea come out of that conference. Like, their competitors are coming out with these foldables, and I refreshed my phone. I didn't go with a foldable, but man, I really thought about it. They're really impressive. But I don't use my phone a whole lot anymore. I'm on PC, and then when I get away from my PC, I'm gardening. I'm going for a hike. I don't want to do any more like digital work. I already do enough on my computers. So, but the foldable looks impressive from Samsung. And I know we don't get Huawei here, but internationally, Huawei is really strong. And Google is coming out with I think they're coming out with a foldable for their Pixel. But Apple's like not a player in foldables yet. And I think that's the next move on mobile phones for those that can afford it or want the latest and greatest. But I didn't hear anything big come out of the Apple conference, which I think is a big weakness of Apple's. They're not an innovative company. I mean, we're in an era where you're seeing so much advancement on the AI side and in general, right? You would think that a technology company would just really be impressing its clientele with, look what we created now. Look what we created now. I don't think that exists at Apple in a as a strength anymore. Any thoughts on Apple?
Yeah, I sold out of Apple early this year in January. I'd held it for 5 years or so. I finally closed it out. I'm keeping an eye on it, but it's definitely been a struggle this year.
Yeah, definitely. All right. Let's keep rolling. If we could look at United Therapeutics, they've had a good couple of weeks, and I'd be really curious to get your thoughts on their charts. They're up 33.88% on news that one of their new drugs, treatments, they had very good results in their clinical trials. And it's now expected that, hey, they're going to have one more successful drug get commercialized. This company is impressive. When they put their minds into, we're going to help people with that particular illness or condition, they have been uh, successful on several occasions. And one more occasion, this is an organically developed drug that is going to be a new franchise for them to make money on. So this one here, I really like the company. They have so much cash. They're buying back shares, and they were buying them back. I love this company. They were buying back shares here, and then I'm sure they announced and go, okay, now announce that the trials are going really well. Boom. Okay. We bought back our share when it was cheaper. So that's good. They are a good grower. And I think with that new drug, they're going to keep growing. They're already a $3 billion company. When we talk about, companies, this is 17% growth and their profit margin, 40%. I would buy a business that was profitable by 40%. It's just really, really good. And if they accelerate their growth, that means they get to make 40% profit. That's like at the bottom. Their gross profit is 89%. These fundamentals are just really, really, really fantastic. So I'm glad that I own United Healthcare. I'm a long-term owner, and I'll be holding this stock for a long time because I think they're not done innovating. They have come out with this new drug, and their big idea is to grow organs, human organs, in a laboratory that would be transplanted to a human. And if they pull that off, I think that's going to be one more fantastic product that they would have available to people. Any thoughts on United Healthcare or United Therapeutics? Excuse me.
Yeah, they did break out from their November high with a black candle on that day. Sold off for a couple days, and then there's a bullish engulfing candle, which gave some hope for the next couple days, which they did rise back up, but they haven't surpassed where they were right after their earnings, and they're not quite at a breakout. But sometimes if they can hold this and get back above that, that could be a really good sign. They are overbought right now, so they may travel sideways for a little while. If they can hold this pricing here, that would relieve the overbought condition on its own, just consolidation over time. Their PPO really shot up, looking very strong. They're definitely have an RRG for relative strength and relative momentum compared to the SPX. It's higher than the S&P 500. They did lose a little bit on accumulation. When the price shot up, it looks like some people sold out. So there must have been a few more buyers, at least for this day, that drove it up, but there was some money flowing out and the accumulation distribution line dropped back down, but it has reversed and going back up at the moment. So I think they look good. They can, if they can hold this for a while, that'll relieve the overbought. And if they can hold this break of this double top, that'd be really good news for them.
Yeah, thanks for doing that, Daryl. Yeah, this stock in particular, I just think very highly of the company, and the fundamentals are right there. And if they can keep being successful with their their drug discovery, their biotech innovation, I think the stock price is going to do great. And their balance sheet's so strong. They had like $5 billion of cash and very little debt. So they said, "Hey, we're going to buy $1 billion of stock back." And that was when they had a market cap of 11 billion. That was really smart. That was like 9% of shares. And then boom, this news. So I really like the stock. We're going to move to a stock the Shadow Guy wanted to look at. He wants to look at a company, C3IS, and this is a shipping company. Not the best website I've ever seen, but maybe I'm just not using it right. So C3IS is an international shipping transportation company specialized in providing transportation services to dry bulk charterers, including major national and private industrial users, commodity producers, and traders. Our executive offices are located in 331 in Greece. Perfect. All right. So their website isn't the best, but if you look at the Berkshire Hathaway website, this is better than that. All right. So we've got a company. Whoa. Am I reading this right? 1.64 million. Okay. So I'm going to look at 1.64 million. Year to date, stocks down. Wow, 5-year. They're down big time. So I guess the IPO June 22nd. And they had a share price of 3,945. Interesting.
They've had 3 reverse splits in the last 2 years.
Okay. And so revenue is pretty low. The trailing 12 months is 38 million. Last year, full year, 42 million, which was good growth from the year prior. Now they're on a losing streak of 4 quarters. So that's not good. Now the global economy, it's not booming. I'm not observing that, but it's not like super slow either, because I know in the US we got tariffs and we're still seeing a lot of volumes come through Los Angeles from what I observe, right? I live in California, and there's still a lot of product being imported. And internationally, you think about how much stuff, China ships around the world to Europe, Latin America, US, other parts of Asia and Middle East and so forth. So I think shipping's just it's a necessity. And the difference between a slow and a high volume year is not a whole lot. It's like oil. You just need a little bit of a drop in demand, and then the stock price, the oil per barrel price goes down a lot. Same thing on the other side. If you see a rise in demand, a small one, you see a big increase in oil price. So the revenue's down. They're kind of on a 4-quarter losing streak. Do they make money? So they do have operating income. They owe some money, so they have to pay some interest. And they do make money, at least in the trailing 12 months, they've made money. Okay. So they pay preferred dividends and other adjustments. Okay. So they do cash flow. Margins look pretty good. Yeah, this is such a small business that I would not invest because I would need to get to know them really, really well before I would invest because they're so small. And the stock is, it's been trading down for 52 weeks. It's not showing signs of promising days ahead. And do they lease their ships? They probably do. They lease some ships, or I'm not quite sure what they do. Their website wasn't very informative. So they provide services. So they provide 3 carriers. Okay. So 3 ships. Now, if you study this closely, this may be a pretty good winner. I did really well with a shipping stock. And I bought it when it was like $60 million market cap, and it went up to 400 million. So I did really well with that stock. That might be the case here. This is smaller, 1.65 million. So I'd be really careful with this. If you really believe in it, this may be worth, investing in, but be very, very careful. It does cash flow. That looks good. There's no analyst covering it. And we'll look at their balance sheet real quick. They do have some debt. Debt to EBITDA 0.01. I guess, why is that? Okay, so their debt is actually $58,000 of debt, and they have cash of 2.28 million. So that's why they don't have any debt. Very good. Interesting idea, Shadow Guy. And it wouldn't take much to double your money on this, and it could be a really nice winner if they make it, if they do well, I should say. I think they're going to make it because their fundamentals look okay. So thanks for asking about CISS. All right. So let's look at, is there any other stock you wanted to look at? I want to look at one more.
No, none for me, Victor. Go ahead.
All right. So let's look at A-Lab. This one here is kind of like the rock star kind of stock in my portfolio. It makes a lot of noise, stays up at night, that kind of behavior. And $36 billion market cap. This is a fast growing company. It's really, the stock price is really flying up. This is a semiconductor stock, and it usually does well when NVIDIA is doing well and the whole space around the data center. It's up nicely, 1.64. It's had a tremendous month, 21%. Year to date, 64, but it doesn't tell you the story. It really sold off hard. And I started accumulating shares here, so I've done well with it. I've already sold enough shares to, pretty much get my capital back, and I'm still in the game with, about $40,000 of stock. So it's been a really fun exercise, but it does come with a lot of volatility, right? It doesn't have a beta. Huh. Interesting. Okay. I thought it was going to have a high beta. So when we look at this stock, the growth, this is why I bought it. This growth is, can't find it very easily. And you have high growth with high profit. Okay. And then high free cash flow. So you combine those three things, they have a semiconductor that does communication between data centers really well. And that's why I bought the stock, and really, I'm glad I did so. So this one here has been a winner. And I was really curious to see if you could show the charts on A-Lab. And while you get that set up, Shambo Basher, we're going to look at GEV next.
So A-Lab broke out of their December, January high and haven't really looked back since. That was on a gap up. And since they have gapped up, they've risen 23%. Their major averages are all upward sloping, the 20-day, the 50-day, and the 200-day. Looks like they have a lot of support right in through here. They were overbought at the beginning of August, and this will be a teaching exercise here. So you see how the RSI came back down all the way to 50?
Mm-hmm.
You notice the price didn't change that much. So RSI can come out of an overbought condition by time, so it just trades sideways for a while, or through a price decline. So they did come out of overbought down to an RSI of about 57 without losing much on the price. As soon as that kind of resolved itself, then they took off for another, looks like 3 or 4 days. At least 3 of the last 4 were buying days. So they're back in overbought at the moment, and they did have a PPO crossover in bullish territory, so that's a pretty good sign. Their money flows look really good, and their accumulation is at a 52-week high. They look pretty strong at the moment.
So your senses are that it's setting up to rise further, or what is your conclusion?
It could very well do that because it's being accumulated at a 52-week high. This RSI may need to pull back down a little bit, but like I said, it can do that over time. So it may not do much over the next 2 or 3 weeks, but after 2 or 3 weeks, we get out of that overbought condition, we may see another rise based on the accumulation and the money flow.
Excellent. Thank you. That's what I wanted to understand. I think that the stock is priced too high, but I'm not selling it. I think it's priced too high by like 35%, but I'm going to keep A-Lab stock. So we have a super chat request from Shambo Basher. He wants to look at GE. And I think I got it right. Vernova. Yeah. So GE split up into 3 pieces. I think it was a good idea. They were having a bad patch or a bad period of time. And I thought it was a good idea. Now this particular part of the company, and it's now a separate company, they do power. They do turbines that generate power. They're getting into nuclear. So really good stuff. And year to date, man, this thing's been on a tear, 94%, 2-year, 217, just a phenomenal rate of return. Market cap's 174 billion, revenue 36 billion. PE ratio's only 155, but it's going to drop down to 64. And analysts think it's too expensive. It's gotten way out of hand. Now, when we look at that type of appreciation, like I showed you A-Lab, right, growing at 100 and some odd percent. Well, not so much here. because these are big projects, take a long time. And their growth is not spectacular, right? It's good, but it's not spectacular. We're going from revenue of 8 billion in a quarter to 9 billion in a quarter, which is good sequentially. It is looking good. And year over year, 11%. Okay. So growth of trailing 12 months of 8.45. Let's take a look at margins. So we saw a couple of really nice margin players, and this one's not one of them. Gross margin 18.47. That means the maximum profit they can make is 18.47. That's how much it costs them to make one of these turbines, get all the parts pieces, pay all the people that have the skills to make this turbine. All right, ship it off to the customer. Okay. The best we can do is 18.5 profit from that point. Then they got to pay for accountants and HR departments and procurement teams and, all kinds of stuff. So their profits are really low. So I think the story that we're going to need power is definitely real. But when I look at the fundamentals of GEV, I'm like, whoa, where's the beef? Remember that expression?
Yeah.
Where's the profit? This isn't A-Lab. This isn't NVIDIA, where NVIDIA is like killing it. They're making so much darn free cash flow. It's incredible. Here, not so much. Their free cash flow is 2.7 billion. That is very good cash flow, 2.7 billion. So let's value this and see where it lands. I haven't done it. And I'm very familiar with GE. My wife owns GE stock. So she worked at General Electric, accumulated some shares while she was there. And I could tell you firsthand that when they had trouble a couple of years ago, her stock really plummeted. But now she's killing it. So good for her. All right. So do you have any comments on GEV?
Well, the chart looks pretty good.
All right. Why don't you go over that and I'll start working on the valuation.
Yeah, so they broke out above their January high back in May, and they haven't really looked back since. They are today trading above their 20-day, 50-day, and 200-day. Looks like the 20-day is declining, 50 and 100-day. I don't know what happened today that's making them jump 5%, but they did create an island of trading here. An island is kind of some stranded prices that are either above or below, and it's just a few days or maybe a few weeks of trading that occurs at that point. So they do have an island here. Their RSI is improving, and it's in bullish territory, sitting at 58. The PPO is in negative territory, but looks like it's going to be crossing over into bullish territory and above the longer term average. So that's good news. Their accumulation is at a 52-week high. Their money flow floundered here and is still floundering. It's not above 0.05. So even though it's above the midpoint, it isn't strong enough to be called bullish as of yet. And they have really outperformed the S&P by 166%, the industrial group by 164%. Their industry group, industrial machinery, is outperforming. They are outperforming that industry by 200%, and that industry group is underperforming the S&P 500 by 7%. So they're still looking really good to me. I don't know how much higher the price can run from here, especially if they're overvalued, but it doesn't seem to be losing strength either. So that's pretty good news.
All right, excellent. So let me come back to my screen and show you where I'm landing on value. And so, as mentioned earlier, the margins on GE Vernova are not great. I'm still taking a very optimistic view on their fundamentals and saying, hey, they're probably going to grow free cash flows quite well. They have a very good cash flow number, and they're going to grow it by 20% in over the next 12 months. And then year 2, 3, 4, they're going to grow by 15. Again, their growth rate was like 8%. So they're not growing their top line very fast, and it's not a business that you can really scale up quickly. These turbines take time. They have factories where they're making these turbines. And a long time ago, there's a General Electric, and I don't know if it's the same division, but I toured the factory where they are reconditioning some of the GE turbines that go on airplanes. And they had this factory. It was fascinating, really interesting. But it's a lot of capital that you have to put into these factories and a lot of skilled labor, which is great. Good jobs. You just can't grow it that quickly. It's not like, hey, you know what? I want to double in size. So I'm going to have double the people that have the skill to do that. No, you can't train up that fast. You need high quality. And for them, they're going to be a slow grower or a slower grower. But the intrinsic value based on a very optimistic forecast of cash flow is $130 billion. I add cash, take away debt. So I get to an equity value of the company of 137, which is lower than their current market cap. It's lower by 21%. So the stock's priced 21% too high. And on earnings per share, their earnings per share number is going to look good. But as mentioned, they're just not in an industry or business that has super high profit margins. And I am taking, again, an optimistic view on their business, giving them a 25. I can't go past 25, not with the margins they have. They're in the right place, right time, but I'm going to 25, and that's all. And they're going to grow by 30%, and they're priced 35% too high. So that's how I value them. That's going to be my approach on GEV. If anything, I'm friendly to GE. I like GE. I think historically they're one of those great companies. It's Thomas Edison's company, but the fundamentals I do not like. Like the company, like the brand, don't like the fundamentals. So that's GEV. Shambo Basher, thanks for sponsoring that super chat. And we looked at GEV for you. And I don't know, are you a stockholder of GEV?
I am not.
Me either. All right.
Honeywell is getting ready to split up, I think, as well. They're a big conglomerate as well, and some of the same businesses that GE was in.
Mm-hmm. Yeah, it's a good idea. That way you give each business focus. Those are kind of GE, Honeywell, 3M, they're kind of, they were created GE like 100 years ago. And what GE did really well for a long time was they would continually discontinue certain businesses or sell them off and say, okay, that's not part of our business anymore. We only want businesses that are really growing and have fundamentals that we like. But that wasn't enough. And then they had to split up a couple of years ago. 3M had to do the same thing, and they split up a couple pieces, spun them off, and it looks like Honeywell is going to do the same thing. I think it's a good idea. 3M stock's doing well. And now the new generation companies like Amazon, Google, Microsoft, they tend to grow with, I think, businesses that complement each other, with the exception of Amazon. That one is a little more eclectic. You have a cloud business that's the biggest cloud infrastructure business on earth, and then you have the biggest e-commerce platform on earth. Now, is there some complement to one another? A little bit. Like, yeah, they run an e-commerce platform that's massive and it needs a big data center. Okay, and that's where it ends, because Now a lot of the workloads that are in AWS have nothing to do with e-commerce. But we'll see. I think Amazon's an incredible company, but maybe someday, 10, 20, 30, 40 years from now, Amazon may find itself like GE needing to split up. Who knows? Maybe Google might need to do it as well. Maybe Microsoft might need to do it as well. We'll see. All right, sir. That was a excellent stream. Thanks for co-hosting with me. Can you share with the audience some details on your channel, please?
Sure. I didn't get that slide created yet, Victor, but I will take care of that.
No problem. Yeah, maybe you can just go to the channel page and just give us a tour.
Yeah. So this is my YouTube channel. I stream these also to my channel as well. So those are the live streams. And then most of the videos that I do, some of these are excerpts from our live streams, and then others, I put out these earnings reviews for all the companies that I own. When United Health was having its problems back in August, put out a quick video, and then I also put out videos on my portfolio as the companies are about to report earnings. Then I go through several things. I look at their relative strength, I look at their momentum, get an idea of how strong they are before moving into their earnings. So you can expect these for all the companies that I hold. And then I will put out individual, more detailed reviews on those same companies, but they're a lot more detailed. So anyway, that's primarily the focus of my channel, looking at it pretty strongly from a technical perspective, but I wholeheartedly value fundamentals as well.
Excellent. Yeah. And, speaking for myself, the way you explain charts and your knowledge there is like really, really valuable. Do you have any videos where it's a little more like enablement? Like, hey, this is, the uh, a lesson on how to interpret charts, how to use charts, and so forth.
I haven't done any on that specifically. Um, I was asked a question one time about, are you any good at this? And that's a hard question to answer without providing some data. I'm trying to find a video. So I actually went through and figured out some metrics that I could use to actually see if I was interpreting these charts correctly and buying and selling at the proper times. And I'm not seeing that video right off the top of my head. But basically, let me just pull open one of my spreadsheets. So I'll open up NVIDIA. So I manage every one of my trades when I buy it, when I sell it. Then I calculate a gain loss ratio and a win rate. So looking at a podcast last week where they were quoting from a big hedge fund manager, and most of they trade a lot more than I do. So it looks like I trade a lot, but I don't trade anywhere where those guys do. They're trading every single day, multiple times per day. But they're looking at a win rate of anywhere from about 50 to 55%. Those are their good traders. Their weak traders win 45 to 50% of the time. So I like to calculate my win rate just to see how I'm doing on buying and selling. So how many winning trades do I have? How many losing trades do I have? And then what is the gain loss ratio? So I have one of these worksheets for every single stock, and I have a video that covers that. I give you some ideas on some good ones that I've done and where I made some mistakes and what I
Mhm.
learned from those mistakes. So that was a fairly popular video.
Yeah, excellent. Thanks, Daryl. And thanks for co-hosting. Really appreciate you having or you covering your piece. And I think it really covers a greater degree of a stock. Like you got fundamentals, but what's going on with the stock? Like how's it trading? Is it expected to continue to sell off or increase in price? I think it's a really good thing. If you do any enablement videos, I will certainly be watching.
Okay.
All right, guys. So let me bid you farewell. Let's see what the market's doing here. And yeah, we're kind of where we were a little while ago. Some real bright green spots and a couple red spots for the market as a whole. Those big winners are making the market move on the Nasdaq and on the S&P, but the Dow not so much. So the Dow stocks, old school stocks, are actually it's a set of a few stocks not doing so good, and the VIX is down. So I want to take a peek at oil real quick. Is oil up or down? So oil prices are up. That's why oil companies were trading higher. All right. So everybody, thanks for tuning in. We had a really nice audience today, and thanks for the super chat sponsors. Thanks for all the members that attended, and thanks for your suggestions on stocks to take a look at. We will stream again on Friday morning, and hopefully you can join us then. And I hope you have a successful day trading. Have a good day, Daryl.
You too, Victor, and thank you everyone for joining and all your questions. We appreciate it. Thanks.
All right. We'll see you guys.